Hi, here is Roberto Varese at the GFCC, and we are here to continue our series of conversations leading up to the GFCC annual meeting in the King Abdullah Economic City in November this year. And today I have Rogerio Studart with me. Rogerio is globally known development economist. He has a long time experience in multilateral organizations like the World Bank, the Inter-American Development Bank, and others. And so thanks for joining us, Rogerio.
Thank you for inviting me, Roberto.
Yeah. The idea for this is to have a conversation on how we will fund infrastructure. There are estimations that different estimations in terms of the investments that are needed for infrastructures around the globe today. The G20 has endorsed an estimation that until 2030 we will need like 70 trillion US dollars around the globe to fund investments in infrastructure. The OECD has a lower estimation than that, but let's say the amount of money needed for investments in infrastructure around the globe is huge. It's massive.
Yes, it is.
Rogerio is, besides his long trajectory as in multilateral organizations and as a researcher, is a distinguished fellow at the GFCC and will be with us in the King Abdullah Economic City in Saudi Arabia. Rogerio, how will we fund infrastructure around the globe in the years to come?
Well, I think this is the question to be answered in the next few years or so. Otherwise, the gap just continues to be growing. We have a major problem, Roberto, which is we have an incredible demand for finance, but we don't have the architecture to make the supply of funds, which is out there. There's a significant supply of funds around the world nowadays, meet the needs of those willing to invest in infrastructure. So you mentioned some numbers. The numbers vary, by the way, and they vary because people are talking about different levels of ambitions and expectations. If you're talking about solving the infrastructure problem of developing countries, you're talking about a demand of funds in developing countries of around 6 to 7% of their GDP. I mean, you go from 5 in East Asia, to 6.5 in Sub-Saharan Africa. But it's a huge demand of resources in countries that are already scarce in resources.
You mean in emerging economies?
In emerging economies, in developing economies, not only the emerging economies, developing economies in general.
Because also here, let's say in advanced economies, yes, there's a need to overhaul infrastructures. Yeah. The American Society of Civil Engineers estimates like 3.6 trillion will be needed really to revamp U.S. infrastructure.
Exactly. This is the point. I mean, if your ambition is to address the need of developing countries already high, if you want to address further challenges like climate change, then you have to transform first of all, you have to invest in sustainable infrastructure in the countries that are now expanding the infrastructure, emerging markets and so on and so on. But you have to make investments to transform the existing infrastructure in developed countries to be more efficient and to be more environmentally sustainable. So according to the ambition that you have in terms of what kind of transformation you need in developing and developed countries, the numbers can differ. But I mean, there's an agreement. The numbers are very, very high. You mentioned some numbers. I mean, recently, for instance, Standard & Poor's came with a projection of the need of $57 trillion of funds until 2030. And you can, and the OECD has a different number, the G20. Yeah. But what we see is a significant demand and a significant gap. The gap has two parts. One is an increase of the demand. The other is the decline in the provision of funds by public entities.
You mean government entities?
By governments and by public financial institutions. And there are many reasons for that. One is kind of historical with the withdrawal of the state from investing in public infrastructure. It happened in significant part of developing countries in the past 30 years, but also in developed countries. It was this view that you could just allow the market, you could just withdraw, and the market would go and fill the gap. And the other part, of course, is increased demand. So the gap has been increasing, and the truth is the mechanism required to fill the gap are still not there. That's why you need a new architecture to face the challenge.
And you mentioned sustainable infrastructures. I recently talked with Chad Holliday, our chairman at the GFCC, and Chad is really into promoting, let's say, the development of sustainable infrastructures and sustainable energy. And he said something that was really interesting, that funds are not in short supply and projects are not in short supply, but the vehicles or the financial tools to connect to those things are not available. Do you agree with that?
Completely. That's what I meant when I said architecture. And I'm sure that Chad had a bigger picture of him, of the issue, but he's making exactly the point. You have a significant increase of supply of funds, of resources that are available there, particularly in the past years after the crisis, with the quantitative easing, with the increase of liquidity provided by the central banks, and you have a significant demand. You need to create the architecture to put those two together.
You mean frameworks?
It's not just a framework. I think this is a very interesting point and a very important point that Chad has raised and that you have raised, and I want to elaborate a little bit on that. It's not just the instruments, not, for instance, just issuing more infrastructure bonds. It's what kind of regulatory framework, domestically, internationally, what kind of business environment, domestically, internationally, what kind of incentives, what kind of institutions, public and private, are playing the role into that architecture.
It's a multi-layered thing.
Exactly. I think that we're moving fast into figuring out that infrastructure, but the pieces, I think moving fast is being a little bit optimistic because the gap is only increasing. I think that we have conceptually understood the problem and we have pieces of the architecture. The whole picture is still not there.
Yeah, you mentioned the gap.
Yes.
So come on, we have 1.3 billion people around the globe who doesn't have access to electricity. Yep. We have 2.5 who doesn't have access to sanitation. So that's really a big gap. So it's a big problem and for sure a big business opportunity.
Okay.
And
yes, this is an extremely important point because we have to address, and when I start by saying that we have to see what the level of ambition is first, and I start saying, well, if you want to solve the problem in developing countries, that's the problem that you have. You have to address the inequality of access to basic infrastructure, to energy, to sewage, and so on. That's one extremely big gap. The second part, which is really interesting about what you said, is that it's a business opportunity. Yes, it is. It is addressing those issues can create a lot of business. Also addressing the issue of sustainability in infrastructure financing.
So let me ask you two questions related to that, to sustainability. Yeah, because you raised this in different moments in our short conversation here. But the first is, why are you focusing on sustainability? Yeah, and the second is, you've been researching that. You've been running a global research project on the roles of development banks in the sustainable infrastructure space. Yeah. So my second question is, what's happening around the globe? Which are some examples that you would highlight as things that we should look at in terms of funding or creating the frameworks that you have mentioned?
This is a very rich question, and let me take that in parts. First, the issue of sustainability. Why focus on sustainability? I think this financing sustainable infrastructure is a win-win-win proposition.
Why?
Well, and I'll explain. It's a win because we have to address the issue of the impacts of climate change which is not only a moral issue. I would say it's the moral, one of the moral issue of the international community. In addition to the one that is still remaining, which is poverty and inequality.
But it's really a practical issue. If we take into account, for instance, that 40% of the world population lives in let's say, by the seashore or in this range of 100 kilometers away from the sea. So let's imagine the impact to life, business, whatever that climate change.
This is so. The first win is addressing the moral issue, which is what are we going to leave for the next generations and so on. This second issue has to do with the physical and economic consequences of that. And the business consequences of that. You talked about the raising the sea levels and the consequence that is going to be to have on seashore cities, but the consequences are so large that is going to affect our geography, our climate, our agriculture,
our security,
name it. So we have to address that. If it were not for the moral issue, what we're leaving for the next generation, we have to look at how this is going to affect our economic system as we know. So this is the second win, because you're addressing the issue of how you can sustain the path of growth in an environment that is deteriorating. The third win-win is that by investing in innovative, sustainable infrastructure investments, you're also creating the technologies of the future.
The business of the future.
The business of the future. If you get more, particularly young people, involved in thinking of the solutions for those problems, and bringing young people requires having projects, require having a mandate to not only to finance, but to have sustainable infrastructure investment projects. If you can bring that together, certainly it's going to create a significant amount of business. It's going to create a technological drive, and for sure this is what we need nowadays when the world economy is clearly losing dynamism.
So you mentioned three things: the moral imperative, the concrete reasons of life because of the transformations that will take place or that can take place because of climate change, and let's say this business, technology, innovation opportunities.
Yes.
Yeah. So, okay, I understand the rationale. And what's happening around the globe? What have you seen, or what are you seeing in terms of models to, let's say, to foster the creation of those businesses and the deployment of sustainable infrastructures?
Well, for sure there has been a significant amount of innovation when it comes to financing.
Okay.
But there's one thing that I want, and I don't want to take much more time because that would be even a second interview. But I want to stress this. I mean, in developed countries, in some developed countries, the architecture to finance regular infrastructure is somehow there. In the United States, you have access to very deep capital markets, but you also have access to banks for the pre-completion investments and so on and so on. In Germany, you already have the universal banks working together with the government and to promote that
That's not the case in most of the southern part of the globe.
That's the point. That's not the case in the most southern or developing economies. And what you observe in developed economies is that because the state has withdrawn from directly investing in infrastructure, they have managed to create means through which they
have or have not.
They are creating means to access private capital.
Okay.
And this is something that I find extraordinary. The best example, and that's what I call crowding in private finance for...
Could you translate that? What do you mean by crowding in?
Crowding in is basically creating the instruments that the markets and the architecture that allows with a little bit of public money to attract
government
money to attract more private sector money, because the private sector does not is prepared to take the regular risk, but the risks involved in new types of technologies, new types of infrastructure are too high for the private sector to venture right away.
Okay.
So you need to have public institutions, public policies in order to create that infrastructure and attract more private capital.
You were saying three different things here.
Yes.
The first is that countries in the South, emerging countries, are developing frameworks or institutions to mobilize private capitals towards investments in infrastructure. Yeah. The second thing is that there is an opportunity or there's a possibility to do that, including the sustainability idea.
Yes.
Yeah. And the third thing, you are developing the rationale for that, considering risk and innovation.
Yes.
Yeah. So I think we'll be back to those points. But in terms of what have you seen, or in your research project, I know that you were comparing different development banks. Yeah.
Yes.
Could you mention that maybe? Which are the organizations that you've been comparing?
Yeah, but first let me go back to the issue of architecture and why national development banks. I'm talking about national development banks. When you look at the infrastructure, at the architecture that you need the agents that are going to play some role inside that architecture. One of those have got to be public institutions. Why? Because you have to first of all, foster the creation of instruments and markets before the private sector is attracted. Or it can take a long time for the private sector to do that because the risks involved are too high. The sunk cost in developing these instruments or markets are too significant. National development banks, they have, in my way, they have a significant advantage in that. Why? Because they are in the business of taking risks for transformation, for development. So if they are prepared to take some risks initially in order to promote some kind of transformation.
So how that works in terms, how do you see that working?
I'll give an example. I think this is
yeah,
good.
Do you see development banks replacing private finance? Do you see then catalyzing private finance? How do you see that interplay?
Not replacing at all. There's no way, this is a point that is important to make, there is no way that public funds can deal with this gap. I mean, it has to be private financing. What I'm analyzing is how you use public institutions as a platform to crowd in, to leverage,
to mobilize, to attract.
So it's a catalytic, not only just a catalytic work, but it's a work of building the platform, building the architecture. And I can give you 2 or 3 examples. I mean, KfW, for instance, of Germany, which is the German Development Bank, has for many decades been developing new instruments and markets and guaranteeing funds and so on to financing infrastructure in different moments of German's history. Now it has been investing significantly into creating the instruments and markets to allow the private sector to go into sustainable infrastructure. Why? Because the Germans, like many other people in many other nations, have given the government the mandate to change the infrastructure towards a more sustainable infrastructure. So they have to do that, and it's very risky to go into something new. So they step in. Once they create the platform,
KfW
steps in and says, I'm going to start developing, for instance, green bonds. And once the market gets used to green bonds, they say, now we're going to provide the liquidity for the market. And then once the market realizes that there's good economic advantage in providing liquidity, you can just get out.
They leave that.
They leave and they move on.
So they move ahead of private finance.
Exactly. This is the role of an intelligent economic policy, I think, of any intelligent economic policy, is how you are capable of entering and leading and then living. Why?
You enter, you design, you prototype. You know, I am an engineer by training, so I think in terms of, let's say,
this is exactly
you prove the concept, you attract others, and you let them lead.
Yes, yes, and that has to be done. The only difference with the prototype is that you have to be all the time talking to the people that are going to take over. You have to be communicating in the market what you're doing and showing the advantage of what you're doing. And then you get a critical mass of investors that say, okay, we want to buy those bonds and we want to manage these markets, or we want to manage the guarantee funds required for that, and so on. So Germany has been doing that. Surprisingly, there are many other examples. The National Development Bank of Brazil, to mention another one, has been doing that. It could be in the larger scale. The China Development Bank has been doing that, but with a different structure. You have examples in developed, emerging, and even in developing countries. When I'm saying developing, emerging, I'm talking about more high income, middle income countries, and we're talking about the countries that are a little bit lower in terms of the income that are doing that. So there are several examples of success. And what my research and my project is trying to do is not to reinvent the wheel, but to tap into the intelligence and the best practice that are out there and say, okay, this is how it's done in Germany, in Brazil, in Indonesia, in China, and trying to use that experience to cross-fertilize in thinking about the architecture, not only the domestic architecture, which is primarily what the research is about, but also the international architecture.
Which are some of the preliminary conclusions?
Well, I think my main conclusion is that there's a window of opportunity now. And the window of opportunity is that there is a significant awareness of the problem of sustainability around the globe. A mandate has been created. Only recently the Sustainable Development Goals have been approved. This is going to create a mandate, and therefore is going to create the political will to address that. Of course, we have failed in the past to address that in a significant way, but you have, through the process, create a lot of awareness of the issues that you're addressing, but also a lot of new ideas and a lot of pressure towards governments to move with that kind of agenda. So that is creating also an opportunity for business to tap in and say, hey, if we're going to do that and we have your backing, maybe we can work together and get this architecture done.
Back to the risk issue. Why is that, let's say, risk mitigation or the design of new tools and frameworks, institutional frameworks, why is that more critical in the case of sustainable infrastructures?
Well, because every time, risk is about looking at the past and projecting the future. This is what, I mean, if you go to a bank and say, I want to open my account, it's going to look at your track record and it's going to see your capacity to repay in the future. Suppose that you are a student. Okay, you just came out of university and you have your degree and so on, but you don't have a track record. That's why it takes so long for them to see you or to see a student as a good paying customer. Okay, so risk is about basically looking at the track record and looking at how this is going to impact your capacity to repay, but also impact the market. When it comes to projects, it's more or less the same. I mean, if companies have been financing hydroelectrics for many years, but when you look at the alternatives, the impact both in terms of revenues and in terms of the impact that they're going to have in the business environment is unknown. So it becomes more difficult for you to evaluate if this is a good risk or it's a bad risk. You have very little track record, and you have to make a lot of assumptions to see, okay, this is an investment that I can put money and is going to be repaid with the return that we have. That's why, and when it came to infrastructure, it has traditionally been the state that stepped in. Now, if you want to replace the state, you have to create a mechanism that the private sector in time can look at that risk and say, okay, that's a risk that I can manage.
And that's related to regulation, that's related to technology, that's related to knowledge in a broader sense. Yeah. So, and in that context, what is the role that an organization like the GFCC could play?
I think it's enormous, because because what you basically, I look at my experience and say, okay, you have to have focal points around the world to understand the challenges and the opportunities that arise in that discussion. I think that because infrastructure is such an important issue for competitiveness, and I'm sure that having councils that are having around the world members that know the issues of competitiveness and how that relates to infrastructure, and knowing their markets, you can create a knowledge hub through the GFCC, and you can exchange among members this knowledge and transform that into business opportunity for members.
So this is going to be a platform in some way.
Creating this architecture is all about creating at the same time the opportunities and exchanging knowledge, and I think that the GFCC can play that role in the future.
Rogerio, thank you so much. We look forward to having you in Saudi Arabia for the GFCC annual meeting.
No, thank you so much. It's been very stimulating. Thank you, Roberto.
Yeah. So Rogerio will be leading one of our panel discussions in the upcoming GFCC annual meeting, and we will continue this conversation in not just in preparation of the annual meeting, but there on the ground. Please stay tuned. Thank you.